What is going on, investors? Back again. Time to talk about Teladoc Health, ticker symbol TDOC. Over the last year, stocks basically flat, but down 2.5%. Year to date, this one's down about 5%, but that's not going to include today's after hours drop after reporting, I would say, relatively disappointing earnings. Down 4.6% in the after hours, down about $8.68. Now, it's interesting with this stock is when we come over to the stock chart, it's painting one story. When we get to these numbers, it's painting something completely different. So let's talk about this broadly. So their EPS missed by 72 cents. They beat on revenue. They boosted their Q2 outlook. But here's the deal with investors is obviously they don't care about that. Okay. They didn't really necessarily care about boosting the outlook. They might care a little bit about missing on this EPS. And they don't really care about beating on revenue because guess what? Stock's down 4% after being down about 2% during the regular session. What they care about is this consensus growth. Now, compared to last year, they're seeing their revenues in this $2 billion range. And that is 83% growth. Look, that's fantastic. But last year in 2020, they grew 98%. I think this is probably what's even more concerning. Total visits in 2021 are estimated between 12.5 and 13.5 million. That's 23% growth. You guessed it. In 2020, they actually grew total visits by 156%. So if they can't get these visits up, well, guess what? That is going to impact revenue, and that is certainly going to impact profits. When we get into these numbers, these don't paint a very, very rosy picture. So we've got the assets here. They kick things off with their balance sheet. I think as you'd expect, a company this young in terms of how long it's been public and kind of its market that they're in as well, it's just a glowing balance sheet. It wouldn't, it doesn't surprise me. This is what they kick their financials off with. Okay, they got $720 million here on the cash side, about $1 billion in current current assets, and they've got total assets sitting here at about $17.5 billion. It's basically where we were sitting at the beginning of the year. Now, it even gets even better than that. Look, total current liabilities are sitting here at $260 million. So they basically have no liabilities at this company. So from a balance sheet perspective, I love what I'm seeing here with Teladoc. Now, unfortunately, that's where it starts to end because here we get to the statement of operations. We've got our revenue here at the top line. Look, I love this growth. So we've got our quarter ended. This is for 3 months. Ended in March. Here, left-hand column is our current year. Right-hand column is last year for 3 months. Revenue went from 180 up to 450. We'll call that 454. Okay, that's more than double growth, okay, on that top line. You gotta love that. Now, unfortunately, the cost of revenue is also doubling as well, but you'd actually expect that. I said unfortunately, but you'd actually expect that, quite frankly. Now, here's what's unfortunate is the operating expenses are absolutely accelerating. Look at sales, okay? You went from 17.9 up to 64.8 million. Excuse me. I just got done with Apple. So I might mix some terms up because I'm used to saying billions. This is in millions. So we've got some technology and development. Look, that almost tripled. Okay. And then we've got this other general administrative that basically doubled as well. Look at this depreciation amortization. When we get over to cash flows, we'll see how this impacted cash flows, but we're going to see that depreciation and amortization is really going to impact kind of their total expenses because that went up considerably year over year. So we'll keep that in mind that this is not the full story. Statement of operations is not the full story. When we get over to cash flows, we'll probably get an even better idea of what's going on here. That gives us total expenses going from 201, that more than doubles to 538. So you guessed it, loss from operation went from 21 all the way up to 84. That's a fourfold increase. Loss from operations. So while we double that top line, we fourfold our net loss, or at least our loss from operations at $84 million. When you come down here to net loss, it gets even worse than that. We're sitting at $199 million of loss. That is absolutely spectacular because we only lost $30 million in the previous year on a quarterly basis. Now, what I want to do is come down here to cash flows because they got a little funky stuff going on up there. we get to add back in that depreciation. So we pull down this net loss number, 199. We were sitting at $29 million last year. This is for the quarter. We get to add back in this depreciation. Stock-based compensation, which we'd expect to be rather hefty for a young company like this, kind of building things up. Some deferred income taxes, we get to add those back in. A lot of other stuff kind of getting added or subtracted. Now, unfortunately, the net cash used in operating activities, it paints an even worse picture than the operating income and net income. We went from 6 million. Is this million? Yes, 6 million. We lost 18 million in this quarter. So it gets even worse when we come here and look at cash flows. And so that is not good. Now, they've got some investing activities, all things being considered, basically flat. Now, they've got some stock options that they're doing, proceeds from employee stock plan. They've got some proceeds from advances to financing companies. These types of things all equal out that we burn through some cash during the period. So, all things being considered, these are, in my opinion, pretty dreadful from a cash flow perspective to go from burning $6 million up to $18 million on the net income side, losing 29 up to 199 from the operating side to go from 21 to 84. And on top of that, your growth is kind of slowing. Anecdotally, I just got a Zoom call with a doctor. Okay, we didn't use Teladoc. Okay, we used Zoom. And so there is lots of competition in this space. Okay, the Teladoc is not the only game in town. So that worries me to a certain degree. So Teladoc, coming over here to the stock chart. Tell you what this does? This stock chart paints a completely different picture. It's actually bouncing off a level where if you want to have some balls of steel and step in and buy this one, it could, potentially be an area. Okay, now that I'm zooming this out a little bit further, I'm seeing that we did have an area marked out down here at about 150 on this one as well. So we've analyzed this stock a few different times. These lines were in there right when I opened up my chart. We broke this critical level here at we'll call that 180. The last two times we've broken 180, we've actually come down to 169, which is about $10 from where the stock is right now. So it wouldn't surprise me in the coming days that this stock could come down here. We'll just call it 170, kind of give you a round number. That's about $7 from where the stock is. Okay, you come down here to 170, that could be a buying opportunity. And I say could, okay, if you want to be in speculative healthcare, okay? And the only way I personally would buy shares of this is if I was already overweight all the mega cap tech stocks, Apple, Amazon, Facebook, Google, those types of companies. First of all, let's just say you had a $20,000 portfolio. I'd have the bulk of my portfolio in mega cap techs, maybe some broad-based ETFs where you're kind of capturing a larger amount, maybe some other healthcare names like a Pfizer, a Merck, the big mega cap healthcare names. I'd rather be overweight them. And then quite frankly, if I wanted to play around with something like Teladoc, I'd probably think about Zoom as well. They're not in the healthcare space per se, but like I said, I just got off a Zoom call with a doctor. And so if I wanted to play around in this space, I'd make sure I'd had a portfolio built out already. And this was going to be a speculative position in my portfolio. It wasn't going to be a cornerstone. Look, I'd rather have Bitcoin and Ethereum over something like this, quite frankly. I'd make sure I'd have bank stocks. I'd make sure I'd had oil and gas stocks. I'd make sure maybe even I had automotive stocks like Ford, Tesla, GM before I get into something speculative like this. Look, I'm not trying to obliterate this. If you own Teladoc and you're overweight Teladoc, let's say you have a $10,000 portfolio and for some reason you have $3,000, $4,000, $5,000 worth of Teladoc, well, now's the time to start diversifying your portfolio a little bit, okay? This is a speculative company. They are not scaling up very well, in my opinion. Yes, on the top line, it is scaling up, but these expenses are scaling up as fast or faster than the top line. When you couple that with an outlook of slowing visits and slowing growth and not necessarily coupling it with slowing total expenses, Well, that's going to add up to a stock that is likely going to struggle in the near future now. But look, the stock chart paints a little bit different picture. Okay, you come down to 170. Well, I might come in here and buy this one. You come down here to 150, it's probably even more of a buy. Okay, maybe kind of a swing, kind of bounce type thing. I'd set some stop losses on some stuff like this because look, you've got some green skies up above this. Okay, you come down here to 170, you find some footing. This thing could bounce up into the 210, 215, 240. It could have a rebound. So I'm not putting this stock in its grave. I'm not saying this stock is uninvestable, like if I was covering penny stocks or many, many, many other stocks out there. This stock is investable. I just want to make sure that you understand that stocks like this are very, very speculative. And at a $29 billion valuation, that is just enormous for a company that is losing this type of money, that's going to have significant investment over the next few years in order to just break even, let alone become a profitable company. So Teladoc Health, like what they got going on. I think they got a fair amount of competition in the space. They're going to, as we saw, they had to spend a ton of money on sales. Look at this, sales went from 17.9 up to $64 million. They're going to have to continue. I mean, you think they're going to spend less than $64 million in the next quarter? No, they're going to have to spend even more. So that has me worried with a stock like this. So let me know down in the comments below. Maybe you're a little more bullish on this stock than I am. Love to hear your opinion on it too. Hopefully you guys enjoyed this video. We'll be back again with more soon. Good luck with your investments.